Is it possible to avoid paying taxes on real estate income? Can you make as much money as you want without the IRS wanting a piece? That's exactly what we're going to talk about in this video today. So stick around. Hope you enjoy the video. Let's roll that intro. Welcome everyone. Hopefully everyone out there is doing good. Like to welcome everyone to the video for today. As you can tell, we're going to talk about taxes when it comes to real estate. So that's kind of what this channel is all about, is talking purely about real estate. Talking everything from taxes to income to how to renovate for a flip. Everything in between you can think of, that's what we talk about here on the channel. So before we get started, I just want to remind everyone, if you do have questions, want me to talk about something specific, please put it down in the comments below. Drop a like on the video. It really helps out the channel. So without further ado, let's hop right into the video and talk about taxes when it comes to real estate. So the first way that we're going to talk about you getting taxed is rental income. Very simple. You bring money in, you have expenses, you have a net profit. That net is considered taxable income by the IRS. Way number two is equity, or what they call capital gains. So when you go to sell your property, quick example, you buy it for $200,000, you go to sell it for $300,000. That extra $100,000 is considered equity or capital gains. You sell it, you collect that money, that can be taxed. Now, I'm sure there are other ways you can get taxed in real estate, but we're going to focus just on these two, since this is what mainly we're all going to be worried about. So before we get any further into the video, just want to make sure everyone understands and everyone knows this is not a tax advice video. This is me not telling you what you should do. I am not a professional in taxes. That's not what I do. You should always hire a professional CPA or someone who is licensed to do your taxes. They will always be able to help you decide what is best for your situation. Everyone's situation is different. We all make different income. We all have different tax brackets. So please check with the CPA before doing anything. So there is an easy way that you can avoid having to pay either one of the taxes. The very first thing that I would always do is I would hire myself a good CPA. A good CPA is going to be able to tell you exactly what your tax situation looks like. They can help you plan for the future. They can help you prevent things that maybe you did in the past. Maybe you did pay taxes. They can help you avoid that in the future. They can help you plan. So having a good CPA is extremely important in being able to understand your tax situation. So with that being said, there are so many different rules and regulations and ways that you can get taxed in this world. How do you even avoid paying taxes? Well, there's a tax bracket that every one of us falls into. It's different for everyone, but the biggest thing that, if you boil it down to being very simple, if you spend more than you have, you won't get taxed. It's very crude, very simple. When you break it all down, that's pretty much what it boils down to. So today we're really going to talk about the main way that you can get what are considered write-offs or expenses to help offset any income you may have. And then we'll also talk about a way to eliminate your equity or your capital gains. How do you avoid not paying that? So those are the two areas we're going to focus on. So let's start with expenses or write-offs. So expenses are exactly that. Anytime you have to spend money for your rental property that helps to keep it up, whether it's to improve it, to repair something, to maintain it, that's all considered an expense. Perfect example. You have a rental unit, has a washer and dryer. The washing machine goes out, it stops working. You have to either call to get it replaced or repaired. Whatever that cost is, You give that to your CPA and say, hey, this is what I spent. They'll be able to write that off. Again, having a good CPA is so fundamental in this whole process of not paying taxes. So another couple examples of some expenses, you can have things like your property insurance, your property taxes. Let's say you have some properties that are out of state and you have a property management company that manages finding renters, keeping the place clean in between renters, hiring out maintenance to maintain the unit. All of that can be considered an expense to your unit. Those are the things that you want to keep a detailed expense report for. If you don't use a property management company, I would recommend getting one. It's a write-off. They do everything for you. They are able to track all your expenses. They're able to kind of manage and handle all of that. They're able to give you your 1099s. They're able to do all of it for you. All you have to do is just kind of sit back, collect all of that money, collect the information, collect your expenses, and give it to your CPA. Makes it really, really easy. Your insurance and your taxes, again, very easy to keep track of. You have mortgage statements you get every month. I'm sure your bank is going to send you yearly reports. If they don't, you can easily ask for them. Send that to your CPA. Insurance, again, very simple. Declaration page is going to show how much you spent, how much your deductibles are, if you had to file a claim, things like that. So those are all good examples of expenses. They can all be written off. Again, you don't always want to write off everything because there may be situations where you don't need a write-off. You don't need any more tax breaks. You actually need to up your income. So that's, again, the theme of the video, having a good CPA. I can't stress it enough how important it has been for me personally. Having that CPA, I can just call, say, hey, this is the situation I'm in, good, bad. What's a good thing for me to do? You know my financial situation. You know I'm trying to avoid paying taxes while maximizing my income. How can I do it? So please get yourself a good CPA. One other thing that I wanted to talk about is your capital gains. The capital gains, as I mentioned earlier, is a way when you sell your property, you sell it hopefully for more than you paid for it. Or your tenant has been paying your mortgage, you've been building equity. When you go to sell that property, the equity that you've gained on it is considered capital gains, and that is 100% taxable. But there's a very clever way of getting around it. Most of y'all know what it is. Before I say what it is, why don't y'all go ahead down in the comments. If y'all know what it is, put it down in there. A+ for effort for you knowing. Great. So it is called a 1031 tax exchange. A 1031 tax exchange is very simple. You sell a piece of property, you have this equity or these capital gains, you don't want to pay taxes on it. You have to find another property that is equal to or worth more than the property that you just sold. You take all of that money you just gained and you put it into that next property, whether it's a down payment or whatever, and you purchase your next property. All of those capital gains are now non-taxable. It is called a 1031 tax exchange. It is a very easy way for you to take a lot of equity, a lot of money you've made in that property, and not have to pay taxes on it. Because who wants to get hit on taxes on something they just made $500,000 for, $1 million, whatever your situation is? Why get taxed on something when you do not have to? That is the key. Do not get taxed on things you do not have to. So one last thing I want to mention for today, with all of this, there's one key thing that I want you all to take away from this. Actually, let's make that two. Number one, having a good CPA. There's no way around it. Unless you are a tax professional yourself, you need someone who knows exactly how the tax laws work, how to get the best write-offs, how to maximize your profits. You need a good CPA. And number two, very, very critical to all this, write down and have a plan to track all of your expenses, all of your income. There's nothing worse, and I'm guilty of this. There's nothing worse than getting to the end of the year, You're starting to compile all of your receipts, all of your expenses, and you realize you just don't know where everything is. You know you've spent money, you know you've done repairs, you know this has happened, that has happened, but you have not tracked it. There's nothing worse than getting to the end of the year, you're preparing to send all these reports to your tax agent, and you don't have anything, or it's not organized, or it's confusing. So get organized, have everything done correctly, write everything down, have a good CPA. So thank you everyone for watching the video today. I really appreciate it. If you've made it this far, I really do appreciate it. Any help and support is always greatly appreciated. So please hit that like button, subscribe, and I will see y'all in the next video.